Well, very good evening, students. So, we have had a good long discussion on journal entries in our previous class. Once again, I welcome you all to my AKS Commerce Academy. I would like to cover up today the remaining part which we could not cover in the previous class. So before that, before I move on to the next, I would like to have a recap of what we discussed last time. The learning objective with which we started was to learn about the meaning of journal, the process of journalizing, then the characteristics and advantages of journal we have seen, the limitation of journal, the area in which journal does not give us the fullest outcome, the steps in journalizing, which is nothing but the process of doing journal is called journalizing. So what are the steps that we have already seen there? Now we will see today the simple and compound journal entries. Discount and rebate, these two terms often are used. Difference between trade discount, rebate and cash discount. Accounting entries for some specific transaction and opening journal. This we will cover up next. So today we will touch upon these two. We will keep these two for the next class. All right. So we'll start with today's discussion. So we'll understand what is simple and compound. So we have already seen few entries in the previous class where how the entries are supposed to be done. A compound is little more added on to the existing one, that also we will. So let us see simple and compound. These are the two types of journal. And simple, the name itself says it is simple, and compound, a little more addition happens there. Now let's see the example of simple journal entry. So purchase of goods worth rupees 5,000 in cash. So purchase goods of rupees 5,000 in cash. So first question that we need to ask is what are the two accounts which gets involved? So one is purchases and the second one is goods. I mean cash. It is in cash. So goods or purchases, this is one and the same. Usually in practice it is purchases. We name it for goods purchased because it is purchased for resale. So now the purchase account debit, these two accounts which are there. Now per goods are increasing when we are purchasing goods for the business to be resold or processed. So there is an increase in purchase or goods and there is decrease in cash because payment is made in cash. Now this is as per the purchase is nothing but nominal, as per traditional nominal, or as per modern it is traditional, and modern it is we have assets, liabilities, revenue, expenditure. So it falls into expenditure. So we will see expense because we are spending money. So purchase goods and cash. Now as per this, the entry which is supposed to be passed is because there is increase in expenses or nominal account, so we will debit this. So how the entry is going to be? Purchase debit to cash because this is going out. So there is decrease in cash because of this particular transaction. The two impacts which has happened, one is on purchases, that is goods, there is increase, so goods are increasing, or there is an expense in terms of purchase, so purchase account debit, and cash is going out. So we'll write here being goods purchased on cash, purchased on in cash. This is our narration, and since we have two side here, debit side and credit side, so we will write here 5,000 and there is 5,000 here as well. I hope this is clear. So very simple entry. Only two accounts was involved in this particular transaction, which is to be debited, which is to be credited, applying the rules of debit and credit, be it in traditional method or be it in modern method. We have come up to a conclusion that purchase account is required to be debited and cash account is required to be credited because there is increase in expenses and there is cash which is decreasing, so it requires to be debited, being a real asset. This is real. All right, we will see the next. Now compound, where one or more accounts are debited or one or more accounts are credited. So little addition is there here. Sale of goods to Satish for rupees 5,000, rupees 2,000 is received in cash and balance to be received later. Now is in this particular example, so what are the two accounts which are involved? So one is is goods Satish, who is sell goods of rupees 5,000. So there is partial credit and partial cash. So Satish, and then there is cash and there is sales. These are the three accounts which are involved. I hope this is clear. Now which one is to be debited, which is to be credited? So sales being revenue, so what is that we need to do? So this we have understood it is required to be credited. Cash, the partial cash of rupees 2,000 which is being paid by Satish to the firm, so there is increase in cash, so there will be a debit to cash. And Satish being a debtor for the amount which is not paying, for which he stands as a debtor for the firm, so we will further debit Satish. So what is the final entry, that how the entry is going to be there? So there is cash which is coming in the business, so cash account debit, then Satish account debit to sales. I hope this is clear. So this is how much cash, how much received. So 3,000 rupees cash received, 2,000 rupees is yet to be received, and sales generated for 5,000 rupees. I hope this is clear, making sense to all of you. All right, now there is a narration to be given. So being sold goods partially in cash and credit to Sati. I hope this is understood. All right. So we will move on with the next one. Let us see how it is going to be. So what is the next? Let us take an example for better clarity. A few examples we will take up which are little different from each other, so that you have variety of examples and you learn most probable situations of journal entries. Ajit started business introducing capital of rupees 50,000 in cash and 2 lakh by check. So Ajit is a businessman. Business is different. Businessman is different. So businessman has given money to started a business, contributed capital in two forms. One is cash, another one is by check. So there are, what are the accounts which are involved? So one is cash, since he is giving money in cash. Second one is bank, and third is capital. All right. Now which is to be debited and which is to be credited? So cash is coming in how much? 50,000. So we will debit cash. Being a real account, there is increase in cash. Asset is increasing, so it requires to be debited. So debit cash. All right. Bank is also increasing because there is a check which is given and there is a capital. Now this is to be credited. So we'll write here to capital, which is 2,50,000. Right. So there is cash 50,000 and bank 2 lakh. So there is a total capital of 2,50,000 which is brought in by the businessman, and capital is nothing but liability of the business to the businessman, not outsider, who is a businessman himself, to whom the business owes this much. That is why it appears on the, or it is considered as liability, inside liability. So being started business with cash and capital, cash check. All right. So this is the end. I hope this is clear. Purchase goods from Ramesh rupees 10,000. Now goods are purchased. So what is the entry that we need to do? For goods we use the term called purchases and Ramesh. We are buying goods on credit. There is no mention of cash or credit. So how it is to be treated? If there is no mention, either it is on cash or on credit, therefore we need to treat it as purchase. How much? Purchase account is debited by 10,000 rupees and Ramesh account is credited by 10,000. Now he happens to be, because of this particular transaction, he has become a creditor for the business, to whom money is to be paid. So it is credited as per rule. He is a creditor, so increase in creditor, or liability and outside liability. So increase in outside liability results into crediting that particular account, and there is increase in goods or being a nominal account, so we need to debit it. Now return goods worth rupees 2,000 to Ramesh. Now there is a purchase was done for 10,000, out of which 2,000 goods were returned to Ramesh. So what entry we need to pass? Is required to be debited. Purchase return is required to be credited. So entry is here, what we have done while purchasing, we have credited Ramesh by 10,000. Okay. Now, when we are returning goods, there is to that extent reduction in creditors value. So what we will do is we will debit Ramesh account debit by 10,000 and to purchase return, or we also call it as return outward. All right, so this is the entry we pass when we are returning goods, being goods return, Ramesh. All right, now let's see the fourth one. Goods sold to Asutosh, rupees to 20,000. So we are selling goods to Ashutosh for 20,000. Now there is no mention whether it is on cash or credit. So if there is no mention, we should treat it as whether it is in cash or credit. So sales, here he becomes a debtor. Here we have received the cash. So question is kept silent. So if it is cash, we will treat this entry. If it is credit, we will do this entry. Return goods by Ashutosh, rupees 5,000. So when Ashutosh returned goods to us, so what is the entry that we require to pass? So there is sales return. So another term that we are using is sales return. Okay, and the second one is Ashutosh. So when the sales return is done, Ashutosh has returned sales goods. So entry we are going to pass is sales return debit to Ashutosh, rupees 5,000, being goods returned by Ashutosh. Okay, so this is the entry we are passing. Usually when there is name given and no mention whether it is in cash or credit, so we should treat that, since name is given, so it is important to understand that when name appears, it means it is on credit. All right, so we have to treat this as credit, only name is given. Now withdrew cash for personal use. Now, if this be the case, then what is the entry that we need to pass? One is cash and second one is for personal use. So we use the word called drawing. So the entry which is to be passed, cash is coming in is it coming in or going out? So when there is withdrawal for personal use, cash is going out. So there is decrease in cash and there is personal account drawing is increasing. So entry we will pass is drawing debit to cash. I hope this is clear. The drawing account is to be debited and cash account is required to be credited because there is decrease in cash, and drawing ultimately reduces the capital. So that's a subsequent adjustment of drawing. But for now you understand that 10,000 rupees has been drawn by the businessman for his personal use out of the business. Now comes the next one. Traveling expenses 5,000 is given to Raju an employee. So traveling advance is given. So entry we are passing is traveling advance which is given. So traveling advance debit to cash. We are paying to Raju as an employee. So this much of advance that we have paid. So there will be 5,000 rupees of debit and 5,000 rupees of credit. So traveling expenses advances paid. So being traveling advance paid. All right. Then the next one. So Raju submitted traveling bill of rupees 4,750 and balance received in cash. Now out of the money that we gave to Raju, 5,000 rupees in the form of traveling advance, he has given us the expense or the sheet, or which is bill. So traveling expense is an account that comes up, and then there is the second one is received in cash. So there is cash as well, and third one is the traveling advance. So you have to understand this here. Now traveling expense, being expense, is debited because this is an invoice given by Rajiv. So we will debit it 4,750. Cash is as well given back to the business or the firm. So how much of cash he has taken? 5,000, out of which 4,750 he has given. So 250 to 700, 4,750 is spent, 250 remains. So total advances 5,000. Now if you see its implication, how it is here, traveling advance was debited by 5,000 rupees. Subsequently, traveling advances when settled, it was credited. So now it is nullified. Cash which was credited because of the payment made against traveling advance cash 5,000, out of which 250 is received. So it is debited and 4,750 was spent as per the invoice. So it is entered as traveling expense cash debit to traveling advance. I hope this is clear. So being traveling expenses settled. All right. Now Raju submitted traveling bill of 5,000 and balance paid. So Raju submitted traveling bill of rupees 5,000. Now here in this case 5,000, let us presume that you submitted traveling bill of rupees 6,000. Let us say 6,000. So we gave him advance 5,000, but the actual expense came or happened was 6,000. So how is the entry that is required to be made? So traveling expense debit, all right, to traveling advance, which was how much? 5,000, okay, and to cash 1,000, because cash was all to be paid back to Raju by the firm for excess expenditure that has happened because of this particular transaction. He was given only 5,000 as an advance, but actual expenditure happened was 6,000. Therefore, we will debit 6,000 traveling expenses and traveling advance adjustment, for which we need to credit the account, and balance cash was paid. So this is how the entry is to be made. So here we will write being traveling advance expenses. All right. Now advance for machine to 25,000 by check to Kiran Machines. So we have paid advance by check to Kiran Machine. So how the entry is going to be there? So Kiran Machine, to whom we paid the advance payment, or we can write advance payment for machine debit account debit to bank, because their payment is made in check. So how much it is? 25,000. So we will debit 25,000 here and we will credit 25,000. All right, bank. So bank is reducing by 25,000 and there is an advance payment. Advance payment is nothing but asset. So there is increase in asset, therefore it gets debited. So being advance payment made. Right? Now comes the next one. Paid rupees 5,000 to Raman, a creditor on account. So Raman, who was a creditor from whom we bought something, we purchased goods from him, so we need to pay him. So what is, and we are making the payment. So entry will be Raman debit to cash. So 5,000 rupees, his account gets settled. But when it is mentioned on account, means there is a part payment done. So there will be some more which will be paid later. So Raman account debit to cash, being payment made. Okay? We'll see the next one. Paid to Param 39,000, a creditor, in settlement of his account of rupees 40,000. So 39,000 rupees was paid. So there was a payment of this, a creditor, in settlement of his account of 40,000. Now how this is a transaction which has discount element in it. So out of 40,000, he accepted 39,000. So there is a payment made to the creditor. So Param debit 40,000 because we have paid him 40,000. Now to cash, there is a payment of 39,000 and then there is discount received. Now, if it is in full settlement of his accounts, that means no further more payment is required to be made. So therefore, out of 40,000, 39,000 was given in full settlement. So 1,000 rupees is the discount, which is payment made, being paid to Param, and discount received. All right. So this is the entry we need. Now received check of rupees 29,500 from Surrender, a debtor, in settlement of his account of 30,000. So we received a check of 29,000. So what is the entry we require to do? When check is received and there is no mention whether the check was deposited in the bank on the same day, then we should presume that it is deposited in the bank on the same day. So received check 29,000 and deposited in the bank. So what is the entry that we need to do? Bank debit to, and there is we need to do to surrender. Okay, how much? 29,500 for 30,000. So 30,000 rupees of credit we have given to surrender in full settlement, and the money received from him was 29,500. So there is a discount element, debit. How much? 500. Is this clear? So whenever the full settlement is done and less payment is made, then there is a discount allowed. So this discount is an expense, and the earlier discount which we have received was income. Right? Now here we need to pass again narration, being payment made and discount received. All right. Then withdrew goods costing 5,000 for personal use. So how much of goods that we have withdrew for personal use? So drawing. There is a term which is drawing, as we discussed. Debit to purchases, because goods, when we are purchasing, we enter it in purchases. So since goods are going out, then we will credit it. So to purchases, which is is 5,000. Now, being drawing of goods done. Then next, goods costing 2,500 given as sample. So when we are giving goods as sample, this is a cost to the company. So what are the entries we are an expense to the company? So sample or goods sample debit to purchase 1,500. I hope this is clear. Why we have done this sample as an expense debited and to purchases, because to that extent purchases gets reduced or goods gets reduced. Goods costing 2,500 given as donation. So again, donation is an expense, donation debit to purchases, which is 2,500. Same narration being goods given as donation. I hope it is clear. Here also narration is required to be done being goods given as sample. Okay. Now let's see the next one. So I hope these 16 entries, which are variety of accounts which you must have seen got involved in transactions, may have given you a good understanding what is to be debited, what is to be credited. Applying the rules of debit and credit by practicing more and more, it will come to your flow. When you happen to understand this concept very well, the modern classification and traditional classification, and start applying them, then you will learn which is to be debited, which is to be credited, what accounts are appearing, are involved in a transaction, and accordingly you can pass on the entries. Now comes the next aspect, which is discount and rebate. Now these are quite often used words, discount or rebate. So let us see what is the meaning. So discount is an allowance given by the seller to the seller of goods and can be of three types. So what are the discounts here? Trade discount, there is trade, there is cash discount, and there is rebate. Now what are these trade discounts? Let's understand one by one. So it is provided by the seller at the time when goods are sold in large quantities, usually for resale by the buyer. It is deducted in the invoice from the list price. Just understand it. So manufacturers usually provide a suggested price to the wholesalers, which is the list price, means the price at which the wholesaler should be selling it to the reseller or the buyer. Now that price which is suggested by the manufacturer is called as the list price. Okay, now the wholesaler who because usually trade discount is given by the wholesaler to the retailer, who furthermore sells it to the end user. So when there is purchase done by the wholesaler from the manufacturer, it suggests that this is the list price for this particular goods. Let's say if the cost is 1,000, it may suggest the wholesaler that the list price may be 1,10,000. Okay, now this is the cost price and this is the list price. Now the seller, or in this the manufacturer, has sold goods to the seller or wholesaler. Now wholesaler cost of buying may be 1 lakh or 1,01,000. Now the list price mentioned there is 1,10,000. Now he has the option to play with the margin. What is that play that he does? He may sell it maybe for 1,05,000, or maybe for 1,06,000, or maybe for 1,09,000, or even for 1,10,000. Okay? But in order to beat the competition and have a good price at which he can sell it to the price at which he should be selling it to the market, the price should be competitive. So he can play with his margin, and that is what is called the trade discount. Instead of, he may allow a discount of, let's say, 2% on 1,10,000. So 10% is 2,200 rupees of discount. He may allow 2% on 1,10,000 as a trade discount in order to promote the sales, volume sales, large quantity sales. I hope this is clear. So in the invoice, there will be a mention that the lease price will be given there, like it is appearing here. Let's say this is 1,10,000 is the lease price, but there is a discount of 2%. So 2,200 will be deducted from the leased price, and then who is bulk buying can buy it at 1,10,000 less 2,200. So this is also, list price is also called categories price. So when trade discount is provided by the seller to the buyer, it is not recorded in the books of account. Why? Because the buyer's purchase price in this case is 1,10,000 minus, so it is 90. So 1 lakh, okay. So 1,10,000, so 1,07,800. So 1,07,800 is the purchase price for the buyer. So, and there is still a margin for the wholesaler because he is allowing trade discount on the least price. So this is to be understood. Okay. So let's see the next one in an example. Amit sells goods to Bikas of rupees 10,000, allowing 20% trade discount. So what should be the purchase and sale price? So how the entry is to be done? So list price was sales goods to Vikas of rupees 10,000, allowing him 20% trade discount. So 10,000 minus 20%, which is 2,000. So effectively the buying price is 8,000. So this is the sales good. So when we are selling goods to Vikas, so Vikas will be debited by, and to sales only 8,000. So there is no mention of 2,000 rupees. So this is 8,000. I hope this is clear. Invoice, there will be deduction of this 2,000 and actual selling price happens to be 8,000. From the list price, there will be deduction of 2,000. So what is the advantage? So it improves the sales as it encourages buyers to buy large quantities. So this is one. The seller will have edge over others. If he provides more of discount, trade discount, more of buying can take place. It reduces the purchase cost of the buyer. So simple, because of purchase, since purchaser is paying less amount, so there is a less of cost to the buyer when it comes to availing the trade discount, though there is no mention of it in the books of account. Change in the rate of trade discount may be used as a tool to face competition. We have already seen. If others are giving a trade discount of, let's say, 1.5%, if you are offering 2%, in that case, you will have more of sales happening. So it is used as a tool. Different prices can be charged from regular and occasional customers. So yes, so there may be variation in the 2%, 3%. If there is a regular customer, you can offer him a little higher trade discount, or if he's an occasional customer, a lesser of trade discount may be offered. The play can be with the wholesaler, who can decide what percentage of trade discount to be offered in order to promote the sale. Usually it is more for regular buyers. Now it enables the retailers to sell the list price and earn better profit. Now this is also very important. So retailers to sell at the least price and earn a better profit. Retailers can sell at the list price, which is mentioned suggested price, or in Indian situation we call it as MRP. The retailer may sell up to MRP, or if he can provide some discount in order to bring in more buyers, that is up to him, but to this price he can sell and earn more profit. Cash discount is allowed by the seller of goods to encourage prompt and early payment. Now this is also important, that when there is a cash discount, trade discount, no entry is required, but in case of a cash discount, we required to have the entries done there. So what will be there? What is going to be the entry in case of a cash discount? We will see here. It allows the seller of goods to encourage prompt and early payment. So usually this is used as a tool to promote more of sales. So allowed in percentage, say 2% is allowed after allowing trade discount, or from the invoice price. It is an expense for the business allowing it, and gain for the business who is receiving it. So this is important, that when it comes to allowing the trade discount is an expense. Sorry, cash discount is an expense. It is usually done to encourage the buyer to make the payment earliest, because for early payment done, there is some discount which is offered by the supplier. So this is, for the supplier it is an expense, for the buyer it is a gain. So that is what is called cash discount, but it is only only on payment, be it on cash, in cash, or by check. So Parth sells goods of rupees 1 lakh allowing 10% trade discount and 2% cash discount. Calculate cash discount. So there is 10 lakh rupees of 1 lakh rupees. So how we are going to enter this? Let us understand. 1 lakh rupees is the lease price. Okay, 1 lakh allowing 10% trade discount. So less 10% means 10,000. What is the amount that comes up is 90,000 and 2% cash discount. So less 1800, 1,800 and 88,200. This is the discount. This is what we have. Yes. So this is the account. This is how we have come up to the selling price. This is the selling price. So this one is the trade discount straightway deducted. Now this is the invoice and there is a cash discount of rupees 2% provided the payment is made either on the spot or prior to due date, whatever is the term of agreement between the buyer and the supplier. So we have come up to sales price. Accounting for cash discount. How the accounting is to be done here? When cash discount is received, creditors cash check and discount received accounts are involved. So we have seen, we'll see it again. So cash discount is an expense for the supplier because he is bearing the cost of discount provided over the invoice price provided by the supplier to the buyer. Now there is a creditor, the term, and the cash, or if the payment is made in cash or check accordingly entered. So discount received account. When we are making the payment and availing cash discount, then it is discount received. When we are receiving payment and allowing discount, then it is a discount allowed. So this is how the entry is. Let us say cash discount. So when this is the discount received, so it is an income. So how we are entering it? To discount received. So cash debit to discount received and to, this is not received, this is yeah. So we are allowing it. So cash account debit to discount received is an income. It should not be appearing here. When we I'll reframe it. So when we are making payment, there is an availing discount. Okay, so this is an income. So let's say supplier debit to cash to discount. Okay, so let's say 1 lakh rupees cash, we have paid 99,000 and 1,000 is the discount that he has allowed. So this is an income. This discount is an income. And similarly on receipt, the entry will be cash debit debtor to discount. Since we are allowing discount, so debit discount debit. Now how it is? Let's say 1 lakh rupees debtor, cash is received 99,000 and discount allowed is 1. I hope this is understood. Let's see the next one. When cash discount is allowed, debtors, cash, bank and discount allowed accounts are involved. So when cash discount is allowed, so what is the entry that we are going we have already seen here. So cash discount is allowed, that means discount is an expense. Debit, we are receiving cash, so cash account is debit and to debtor. Say debtor is 1 lakh, cash is 99,000 and 1,000 is the discount. This discount is an expense. Now, advantages of cash discount. Seller of goods realizes the cash promptly. Possibility of bad debt is reduced because you are giving him some inducement to pay early and avail the discount. It improves cash inflow by offering this cash discount. There is some increase in cash inflow so that rotation of cash can easily be done by the firm or the supplier. Early payment results in higher cash discount, thus increases income for the buyer. So if the early payment, if he's in a position to make the payment early, then more of such payments are done, more of discounts he is receiving. Better cash discount enables selling of goods at a lower price. Now, if there is higher discount, higher discount, so he can sell at lower price because he can pass on the discount benefit to the buyer, thereby resulting into higher sales. Now, rebate. Now, trade discount we have seen cash discount. Let us see the rebate. Usually rebate term is used when supplier supplied goods to the buyer, but the buyer does not find it as per the specification given by the buyer to the supplier, or if there is something faulty in that, it is not resellable because of certain any factor. So the rebate is offered in that scenario by the supplier to the buyer. For buyer, the rebate happens to be the income, or there is, because he does not need to pay that much amount to the supplier. So in a way, it is an income for the supplier, I mean buyer, but it is when it comes to the supplier, it is as a expense. Let us see how it appears. It is also a discount allowed by the seller of goods, but for the reason other than for which trade and cash discounts are allowed. Rebate may be allowed for poor quality of goods or not as per specification. Now, accounting of rebate, how it is done. So let us see in the seller's book. So both the books, if we understand, it becomes easier. So rebate allowed account for the supplier or seller, rebate allowed is an expense, hence it is debited, and supplier account by that amount gets credited. In the trading account, rebate is deducted from sales. Now here, this is important to understand, which you will learn later. So when there is rebate is allowed, then from sales, let's say 1 lakh rupees of sales which we have already entered, and later on we came to know that a rebate is to be given, so by of rupees 2000. So actual sales does not happen to be 1 lakh rupees, it is actually 98,000. So 2 lakh rupees is deducted from sales in the trading account. So this is how it appears, 98,000, not 1 lakh. And this 2,000 gets deducted from sales in trading account. We will learn to prepare this trading. Now in buyer's book, supplier's account debit and rebate received account is credited. So supplier account is debited. In the buyer book, supplier is debited to the extent of rebate given by the supplier to the buyer, and rebate received is an income, so it gets credited, or a separate account by name rebate received gets credited. In the trading account, rebate is deducted from purchases. The way a rebate is deducted, rebate allowed is deducted in trading account. Here also, when it is received, then we have to deduct it from purchases. Difference between trade discount, rebate, and cash discount, we'll see here a table. This gives you a brief understanding on this. So nature, what are the differences? Trade discount, it is allowed on sale or purchases, so we have seen, whereas rebate, it is allowed because of reasons other than those mentioned for which trade discount is allowed, say because of poor quality, and cash discount for early payment. So this is understood. Nature of transaction, on both cash and credit sales, trade discount is allowed. Rebate, it is allowed both on cash and credit, but cash discount is allowed on cash payment, early payment of cash, for which cash discount is allowed. Recording, so trade discount is not recorded separately. We have seen it is recorded separately in the books of account, which is rebate, so which ultimately gets deducted in trading account from purchase or sales. Cash discount is recorded separately in the books of account. We have already seen that cash is, if it is discount is offered, given, then it is an expense, received, then it is an income. Amount of trade discount is deducted from the invoice, not deducted from the invoice. So trade discount, we are deducting it, it is not deducting, and it is not deducted from the invoice. Cash discount, so there is, in case of a trade discount, the amount is deducted from the invoice, whereas in case of a rebate, we have seen it is deducted from sales purchases in the trading account, and it is not deducted from invoice. Cash discount. Now consideration for allowance is purchases. Now here, for the allowance that we are providing, the consideration is purchases, where in case of a trade discount, so if you are purchasing more, then there will be a trade discount offered. Higher the purchases, higher may be the trade discount given by the supplier. Consideration for allowances other than for which trade discount and cash discounts are allowed. So rebate is not basis the volume of purchase, but basis the consideration is given if there is error at the supplier's end, not matching with the specification given, or there is goods are supplied not in proper condition, then this comes up into picture. Consideration of for allowance is payment, so early payment, and there is cash discount. It is related to sale and purchase of goods, it is related to sale and purchase of goods, but it is related on payment basis. So I hope this is clear. Now to be covered in next class, so what is that we are going to cover in the next class? Accounting entries for some specific transaction, this is to be covered. Opening journal entry is also that we will see. There are some accounting entries, specific type entries, transactions we will see so that you have further more deeper understanding on journal entry once we take it up, and also the opening journal entry. With this, we will close the chapter. So I hope whatever we have discussed today must have been understood by you all. So we'll quickly go through this. So we have seen, yes, so we started today's discussion by understanding the journal entries precisely on trade discount, discounting, and rebate. What are the rebates that we have seen? Then also we have also seen, so we have seen various journal entries, many of them each covers different accounts. So we have already touched upon the various journal entries. Then we have seen discount and rebates, that we have thoroughly understood what are these discounts and rebates, how these are entered in the books of account, the advantages of various discounts that are offered, cash discount when it is allowed, trade discount when it is allowed, and rebate when it is allowed. There is a table, comparative table as well, we have understood, and this must have certainly given you a good understanding on these, the treatment understanding on the term called trade discount, rebate, and cash discount, and its usage or its treatment in the books of account. This we have already understood. Now, as I told you, these are the things which we are going to cover up next. So for now, I thank you for listening to me. I would expect all the viewers to like, in case if you have liked it, subscribe to this channel AKS Commerce Academy, so that you happen to get the notification of the new another chapter or another session that I come up with. Mention your feedback in the comment section, in case if you have anything that is there in your mind. How is that you liked about the content, or anything which you would like to share to me? I personally go through all of them to understand what is that you have your expectations are, and accordingly, to the extent incorporatable, I try to incorporate. And also would appeal to you to share it to your other friends in your school or in your neighborhood, so that more and more students happen to take the advantage of this. Contact for any query, that if you have, my WhatsApp number is given here, my mail ID is also given. You can connect on either WhatsApp, or you can mail me as you find yourself comfortable. I would certainly like to take up your comments and would respond to your WhatsApp or any query that you have. This video, as I said, is brought to you by AKS Commerce Academy, and I have been now taking up all the 11 class 11 chapter. Subsequently, I'll come up with class 12th as well, and we will try to finish up the whole concept which is there in your class 11th. I'll cover up, so that you don't need to go anywhere else to understand further. This would suffice your requirement from conceptual perspective, alongside the application perspective of each of the concepts that we are going to take up here. Thank you so very much. Wonderful talking to you all. All the very best for your upcoming exam. Thank